Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for January 10th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What I mentioned here, if you were part of the market outlook last afternoon, we were talking about the rejection occurring off of the 2273s. That's the previous month's high price. We've had a couple of days where we've seen price test those levels here. The market tested as high as 22.77 but rejected both days. Eventually we got to push back downward. We know that 57.5 is an important key level. We also know 73 is an important key level. And down here, 22.30, 22.28 is also a key zone as well. That's in the pivot range here. So we have a couple of key zones here to watch. We've been talking about a potential expanding range that we've been kind of developing, but the overall trend has been to the upside. We still haven't quite gotten all of the volume and volatility back. It's still a very quiet market. Anytime you have quiet markets like that, you have to be very, very careful because you have kind of a lack of follow through on patterns that would typically work out. So you got to be very careful in these situations and only look to play the best opportunities until the volatility starts to heat back up. One thing to keep in mind is if price is able to start to push back above this midpoint, back into 2270s, that's going to be very important because I believe that every time price has gotten into 2270 or beyond, we've seen varying degrees, increasing degrees of weakness each time. So if there's any push into 2270 or perhaps a high of 73, watch this area very closely for any signs of a trap, because if there is any weakness here, that could lead to a swing move across the range back into 22.23 and perhaps as low as 22.14. So that's going to be something to watch out for. If there's any acceptance beyond 22.73, that's when we begin to look for the expansion targets to the upside, and the primary one that we're going to shoot for would be 95.75, which is the 25% expansion beyond the December month's range. All right, let's take a look at the intraday time frame. Here it is. On an intraday basis right now, you can see for the most part price went offered off of the previous session's close and then rallied back above it, held VWAP, and is still holding above the previous session's close. So we're getting a little bit of chop above and below it right now, a little bit of a rejection off these lows at the moment. If price is able to continue to hold above 63, that's the absorption point, 62 to 63. It was prior support here. Price dropped through it, made it resistance and dropped. Could not stay down here. Came back up and you see it hold. So right now, short term, I'd be watching 62 to 63. Any rotation into that area could be a short term opportunity to buy for the opposite side of the range into 66 and perhaps as high as 70. But again, that LVN at 70 is going to be critical, because any flow into that area, you got to be able to take profits ahead of that zone, because I believe that anytime price gets into 70 or perhaps beyond, it could be a great selling opportunity. So right now, that LVN is clear over the last 5 days. Any push into 70, half, 71 could be a great short-term selling opportunity right away. Push above it would open up 75 quarter. All right, let's take a look at crude oil. Here's crude. If we bring up our monthly pivots here, there they go. What you'll notice with crude is the previous session had a huge day. It was about 164% of average daily range, had a range of over 2 points, and had been averaging $1.22 or so. Right now, we're only trading about 44% of ADR at a 58% or 58 cents of range. Anytime you have a huge day like you did the previous session where you had a high range day, major price discovery phase, the next day is very likely to be digestion. You're likely to see a low range trading day where the market now digests that recent move and new prices. One thing I have mentioned before is that the 51.67 level into 52 is a very significant zone there. And bulls have been defending it time and time again. I mentioned this last time around. Bulls will keep wanting to defend it. Thus the reason we've seen a little bit of a bounce. But on each of these rotations here, we've seen a failure to really get going yet in crude, and that could lead to a vulnerability of the sell stops below that level. So if there's any failure to hold 67s, there could be a swift move right back to composite value, and that's 46.69. So right now we're at a critical juncture in the chart. 51.67 is a big time level. Today is likely to be a digestion day, so fade new highs, fade new lows, and we'll see how it plays out throughout the rest of the session, because if there's any failure to hold here, it could be big, and we'll watch how that develops. Now on an intraday basis, because we're likely to have digestion today, as we already are seeing, it's a fade new highs, fade new lows day. So that means, we have overnight highs right here at the moment. Should price push above those highs, that's when you would be looking to actively fade back to value. You see lows here and here and here and here and here. Taking out those lows, perhaps into this zone and the lower part of this profile, this would be a zone down here where you'd be actively looking to return it back toward value. So that's the early goal, is to fade new highs, fade new lows short term, until proven otherwise. Now let's take a look at gold. Here's gold, still in an uptrending market, has been rather bullish compared to recent history, but really isn't continuing onward to the upside just yet. You can see right here, 1145 to 1146.5 is a very significant pivot. And I mentioned before that as long as bulls hold above that pivot, there's a chance at more upside, even into 1200. That new pivot now is 1170. That's now the next stage up. We have a clean market structure up here, here, and now here. Bulls really need to keep price above 1170, or especially even if it gets as low as 1165. But 1170 is a good spot here. And you can see the rejections that are occurring on these highs, which means we may see price drop into the zone. If it does, this is going to be an area that's going to be significant for bulls to defend for a shot at pushing this thing into 1200, because any failure to hold above the 65 will start to rotate and put pressure on 1145 below. So right now, a little bit of a rejection on these highs. We've had an uptrending market though, so my guess is that any pullback here, shy of 1170 or into 1170, is a great shot for at least a quiet continuation toward 1198 and 1200. All right, let's take a look at the NQ. The NQ is looking good here. You can see this is the monthly pivots here, so price is holding just outside the previous month's high, which is 49.94.5. And if I were to change this here to a weekly PivotBoss pivots, you'll see right here that price is also forming at 2 days just above the previous week's close price, which is 5,002.5. So we're forming this little range right here above two major pivots beyond range. We have an expanding range that's been developing. What we're looking for is signs of rejection. What I'm looking for is signs of rejection, because any failure to hold 5,002 and especially 49.94 likely runs the stops back across the range to take out stops below this low. That means we'd be hitting 48.40, perhaps as low as 4,800. So it could be a move of about 150 to 200 points if price fails to hold 5,000, generally speaking. In order to do that, obviously, there may need to be a rejection of these highs first, or the stops need to get run below the 2-day lows. And currently speaking, we're in an uptrending market. We still see higher highs day over day and higher lows day over day. So we have to continue to be very careful up here and continue to watch for signs of rejection, because it could pay off very nicely should it play out the way we expect. Okay, let's take a look here at the intraday time frame now to close it up. On an intraday basis right now, price held on a pullback low into 5,007 quarter, just shy of the previous session's close, just shy of the previous week's close, and rallied back above the previous session's close. We've been in a little bit of an uptrending market, I mentioned, so buying dips is still likely the best case scenario here for short-term bulls. But again, 5,000 and that 5,002 half in that zone, very important. You can see the LVN building out all rotations into that area, expect bulls to come in and defend. But as soon as price fails to hold that zone, you could see a lot of stops come out, and that's what could start to trigger this thing lower. But before that, if you want to be early, watch prices beyond 50.29 half. That's the previous session's high. If there's any push up there and a failure to hold above that level, that could begin the move back to 5,000 and perhaps lower. All right, that's it for now. Let's see how this plays out the rest of the session. Good luck and trade well.